A very good evening, everybody. Welcome to the live webinar on Japan in Focus. How far can the Nikkei go? I'm Ming Hui from Phillip Nova, and speaking to us tonight will be Ms. Maki Kudo from Global X Japan and my colleague Mr. Sean Chow from Phillip Nova. Before we officially start, I would like to remind everyone that if you have any questions throughout the course of the webinar, you can drop them into the questions box and we will address them during the live Q&A session towards the end. And now, without further ado, let's kick off the webinar with a quick introduction of Phillip Nova. Over to you, Sean.
All right, thank you, Ming Hui. Thank you, everyone, for attending this webinar tonight. Tonight, we are going to be talking about Japan. With Japan making new highs every day, we're going to zoom in on how far can the Nikkei go, together with our partner from Global X Japan, Ms. Maki Kudo, who is a VP over there. Now, before we begin, let's have a very quick disclaimer for everyone. So just a reminder, today's presentation is only for general circulation only and does not take into account your specific investment objectives, financial situation, or needs. You should seek advice regarding the suitability of the investment product and take into account your specific investment objectives, financial situation, or particular needs before committing to invest in any of such products. Now, today's agenda, we will start off with a quick introduction to Phillip Nova, what our company does, who we are, what our services are, and of course, a very quick introduction to our Nova trading app as well. Then thereafter, I'll hand over to Ms. Maki Kudo to talk about how far can the Nikkei go. After that, we'll also have some introduction to some of the global X ETFs, which are pretty interesting. And we'll also share with you some of our account opening promotion and have a Q&A session before ending the session off. So yeah, without further ado, a very quick introduction to everyone about us, Phillip Nova. So Phillip Capital, for those of you who might be new to Phillip Capital, it was actually founded in 1975 and it has been a very strong and ever-present player in Singapore's financial industry since then. So since 1975, the market has gone through many ups and downs with many memorable market events ranging from like the Black Monday to the dot-com crash and to the recent COVID-19 pandemic and the Iran war. So through all these cycles, Phillip Capital, our parent company, they have been there serving investors through every market event. And together with Phillip Capital, Phillip Nova was also there, right? Just that we were inaugurated slightly later in 1983. And actually, Phillip Nova, for those of you who might have known about us previously, we started off doing futures, and previously we were actually called Phillip Futures. But as more and more people joined our onboarded with us as clients, right, we realized that their investing and their trading needs evolved. So we also evolved together with them, and we started to onboard many different other asset classes. That means we evolved from just offering futures to expanding our services and products to include forex, to include options, to include CFDs, and most recently equities, stock equities, right? So we have been around for a long time as well, and with this long runway, we have established three things together with our clients, right? So the first thing is our trust and credibility in this financial industry. I think that's a very important factor when all of us consider onboarding with a broker, where we are really investing for the long term, trading with our hard-earned money. We have to make sure that we onboard with a broker that has got strong foundations, that is supported with institutional banking, and most importantly, one that is regulated and secure and operates under Singapore's regulatory framework. And of course, as a user of a trading platform, you want to be connected to global market access, right? So we offer access to over 21 different markets globally. And not only that, like I mentioned just now, we offer a wide range of products that you can do for multi-asset trading: stocks, ETFs, futures, options, CFDs, forex, and commodities. And of course, we also have our own analysts who are there to provide you with timely analysis and insights so that you can capture opportunities with confidence. And importantly, during your trading journey, there will be times where you might encounter some issues here and there. It could be because of the market, it could be because of some movements in the exchange or some technical issues. So not to worry, we also have a very dedicated team to support you. So over here, we have our IT and our dealing team who are here 24/5. As long as the market is open, we have in-person support for you. And of course, from time to time, we organize webinars and seminars because we believe in investor education. And these are the things that could help to, empower your full and your investment journey in the long run. And of course, a client first approach where we also personalize service and guidance tailored to your investment needs at every step. Now, what is the beauty of multi-asset trading? Basically, it means that with one account, one login, and one single wallet ledger, you can trade across different asset classes. And that essentially means convenience, right? Because with the same $100,000, for example, you could actually trade futures, you could buy shares, you could trade into Forex, and you can have these positions at the same time within that same account, and you can have the same overview of them. And very recently, we have also launched shares financing, where you can actually use your stock holdings as collateral to unlock additional trading opportunities. So what does this mean? It means that with the money or the cash that you have with us, you can buy more than what you have in cash, right? At a rate of 4.5% per annum for USD and SGD, right? And the beauty of this is that it actually improves your capital efficiency, right? Sometimes when the market conditions are good, when there are certain opportunities, you need not rely on just the cash inside your Nova account. You could actually unlock more than the cash that you have on hand and capture these opportunities, be it for the short run or for the long run. And with that, you could actually get up to 3.3 times buying power, meaning to say with $100,000 cash, for example, you could actually unlock up to $333,000 of buying power. And the borrowing on top of the cash will be charged based on 4.5% per annum. So for those of you who has actually tried this before, you will know that 4.5%, if you do it in the short term, it's just a short-term cost compared to the long-term opportunity that you're capturing. And of course, on top of this, you also have very, very competitive Forex conversion rates. I believe most of you travel, and when you travel, you're always looking for the best money changer to convert your money when you go overseas. So likewise, why not for your investment and trading account, right? So over here at Nova, Phillip Nova, we offer many different currency pairs for you as well because we offer access to global markets. And for each of these currency pairs, we keep the spread very tight. So if you were to compare against other services in the market, you'll see that our costs here, roughly what's shown in the table over here, from 0.05% to 0.12%, they're actually very, very competitive. And in the long run, if you're an investor, it could actually even save you more compared to the upfront commission, right? Because for every $1,000, you're looking at a 0.12% conversion cost. And as your investment grows bigger, and when you want to convert them back, there's another conversion cost that you will incur as well. So this will actually help to save in the long run. Now, let me quickly share with you about shares financing. Please take 1 minute to view this video together.
Pick one to share about. Share margin trading or share your lunch?
Definitely share margin trading. Lunch can wait.
In one sentence, what is share margin trading?
Share margin trading lets investors use some of their shares as support for new purchases. So instead of paying everything in cash, you can free up some money without selling the shares you want to keep. In short, it helps investors make their capital work harder without changing how they invest.
Oh, how does that work?
Let's say you want to buy some shares for $10,000. You deposit $5,000 and the broker lends you the other $5,000. When share price goes up by 10%, you earn the 10%, minus the interest on the amount borrowed.
How is this beneficial for investors?
Investors today are not just looking for access to markets. Our focus is on helping clients stay invested, remain flexible, and make more informed investment decisions.
Is there a minimum amount to invest?
No, there actually isn't. A prudent way is to start with a small portion of your portfolio at conservative margin levels, so you can understand how margin works and how market movements affect your account before increasing exposure.
Share margin trading is a tool designed to give investors more flexibility and opportunity in the markets. Trade now on the Phillip Nova app.
Yep, thank you for taking the time. So yeah, for shares financing, it's really about flexibility, where you can capture ongoing opportunities without liquidating existing position because of the additional buying power that you can gain. And of course, you can get leverage if you spot high conviction positions, right? You can actually take on more leverage with shares financing. And for those of you who invest in, dividend stocks or those high income stocks, high income ETFs, right? You can actually borrow at 4.5%, invest in those high yielding assets, and that spread is just your additional return that you're capturing year over year. And of course, like I mentioned, we do offer global markets, and for stocks and ETFs, these are the commissions that we have. So for today, I'm sure most of you are interested in Japan. For Japan, our commission starts from 0.1%. And importantly for Japan, we have free live market data, meaning you can actually see the live prices on our platform for free, no additional charges on those market data. Now, for those of you who might have not, who hasn't seen our platform before, this is our Nova trading app. All right, it's available on desktop, on web, on mobile, and also on tablet. Right. So when you log in, this is the home screen that you see, and then in order to to place a trade, you need to deposit in. Right. So it's just very simple step. Clicking on a fund deposit, you can use your PayNow to put in whichever amount that you deem suitable, and the funds will actually reach your account within 1 to 2 minutes. Most of the time it's instant because it's a pay now feature. And like I was mentioning just now, when it comes to currency conversion, the rates are very, very competitive. So as you can see over here, this was captured at yesterday, in the morning yesterday. So this was the Yahoo Finance rate where they quote from Morningstar. 1 is to 162.21 Japanese yen. So if you look at our currency conversion rates that we quote over here, right, it's actually very, very tight. Very so we don't really charge a very wide spread on this, and this is what we believe would also help you in your long run when it comes to investments. And if you were to place a trade, you can just navigate to the watch list. So you can look for the product that you are interested in by adding in a ticker, or otherwise you can just select the product if you have already previously added it in, and then just click on place order, and you see the order ticket popping out. You can just put in your prices and put in buy to queue your order that you want to place. And for those of you who have used TradingView before, Nova is also able to connect to TradingView. So just look for Nova when you want to click on the trade with your broker, and then connect to us inside TradingView. You just have to put in the same login credentials and use the OTP use the 2FA from the Nova app. And then once you are in TradingView, right, you are able to access the features inside TradingView. Of course, there are different tiers of features depending on whether you're a paid user. But for everyone, there are some basic features that you can always access. So one of it is like the stock heat map, which you might find useful to have a very quick glance of what's happening in a certain market. So in this instance, I chose the the Nikkei 225 index, but you can always tab it to global markets or to US market or Singapore market, right? And there's also screeners in TradingView. You could use the stock screener, or you can use an ETF screener. So for those of you who has used a screener before, it's pretty similar. You can screen based on your parameters and have a very quick view of what are the stocks that are being listed based on your parameters. Yep. So that's all for the introduction to Phillip Nova. If you have any questions regarding our services, regarding our company, and regarding our trading app, I have a Q&A at the end of this session, or you can put in your questions in the chat box, and we will reply to them later on as well. Yep. So now, without further ado, let me hand over the time to Miss Maki Kudo, who will be sharing with us on the Nikkei, right? And Miss Maki Kudo, she's a VP, Vice President from Global X Japan, and Global X Japan is an ETF issuer which issues really interesting ETFs. And today we're gonna hear from them on the Japan landscape, and to hear more expert opinions on how the Nikkei has been performing and why the performance really should get more attention from us as an investor. Yep, over to you, Miss Maki. Thank you.
Thank you, Sharon and Phillip Norbert, for having me today. And for the audience, thank you for making the time to join in the webinar tonight. So good evening, everyone. And my name is Maki Kudo from Global X Japan and speaking to you from Tokyo. And I hope this session provide a clear and practical overview of the Japanese market. And I will introduce several key themes that are shaping investment opportunities ahead. So here is today's agenda. So I'll begin with quick introduction of the Japan equity market. And after that, I will introduce our company, Global X Japan. Then I will walk you through the current market environment and finally discuss the 4 themes we will be focusing on today. So let's start with a major turning point of the Japan equity. So after the 30 years of the stagnation, the Nikkei finally broke its 1989 records. So we've seen new highs since last year and marking a major shift in momentum. So the old lost decades story is over now. And thanks to structural reforms and better governance, Japan is moving out of stagnation and entering a new phase of real growth. And Japan remains one of the biggest equity markets in the world. So as of the May this year, Japan, the Tokyo Stock Exchange is fourth largest globally and also the second largest in Asia behind Shanghai. So with a market cap of the 8.6 trillion US dollars. So Japan is also holds the second largest weight in the MSCI Upweight Index. So the big takeaway here is Japan market is simply too large and too significant to overlook. So what is the best way to invest in Japanese equity? So you have a few options. First, it is an individual stock. So individual stocks allow investors to build their own portfolios, but they require a lot of research and also the carry higher company specific risk. And the mutual fund offer a professional management, but they are less transparent and do not provide intraday liquidity. But ETFs, on the other hand, offer the best both of worlds. So broad diversification and also the relatively low cost, plus the flexibility to trade at any time during the trading day. And since they follow the transparent rule-based indices, they are a very practical and easy way to get exposure to the Japanese market. Let me go a little deeper with the characteristic of ETFs. The first, diversification. So the single ETF can provide exposure to an entire market or sector or theme. So it's a great way to reduce the risk of relying on just a few individual stocks. The second is lower cost. So the ETFs generally have lower fees compared to the mutual fund. And third, flexibility. So since ETF trade like stocks, so you can buy and sell them at the market price throughout the trading day. And the fourth, transparency. The most ETFs disclose their holdings daily, uh, so you always know what exactly you have. And accessibility. So ETFs offer straightforward access to a wide range of geographies, sectors, and even other asset classes such as bonds or commodities. Because of these features, ETFs have become a preferred choice for investors looking to access to the Japanese market. And so with these characteristics in mind, how large is the ETF market today? So globally, ETFs has grown rapidly in popularity, especially in the US. And the US leads this expansion with a well-developed ETF ecosystem and a very strong investor participation and deep liquidity. So worldwide ETF assets have now reached about 20 trillion US dollars, and also the showing how widely adopted ETFs have become. And now looking at the Japan ETF market, so our ETF market is still catching up to the US, but the growth has been really steady and consistent. So we now have about 400 ETFs listed in Japan with total assets reaching around, the 700 billion US dollars. So more and more Japanese investors are now using ETFs as an effective tool to build their portfolios. And we expect this upward trend is continue. And let me introduce our company next. So let me tell you about who we are. So Global X Japan was founded in 2019, and we're the partnership between the Global X US, which is pioneer of innovative ETFs, and also with Daiwa Securities Group. This is one of the leading financial groups in Japan. And what makes us unique is that we are Japan's only asset managers that specializes entirely in ETFs. So our mission is really simple to provide efficient access to growth themes and strategies that you won't find anywhere else. And since our launch, we have been working hard to expand our lineup and also to help grow the ETF ecosystem in Japan. And today, we are following the 71 ETFs and covering the exposures. And as the end of the last month, our AUM reached 1 trillion Japanese yen and about 7 billion US dollars, and reflecting steady demand from both retail and institutional investors. And our lineup is grouped into four categories. The first one is thematic growth. It is like focusing on new economic themes, trend, such as semiconductors or AI or defense tech. And the second one is income. These are the strategies like high dividend stocks and covered call strategies designed for investors looking for steady cash inflows. And the third one is core type. These are the building the blocks for any portfolio, like the central components. And finally, the commodities. This includes things like physical gold or companies that these resources like uranium or lithium, such kind of things. And so these four categories together form a comprehensive suite that supports a variety of the portfolio objectives. And on this slide, you can see our top 10 ETFs by AUM size, and the one with orange highlighted are our Japan-focused ETF. And as you can see, they are performing well and continue to attract a lot of interest from investors. And slides 13 to 15 show our complete ETF lineup. So you'll find everything here from growth and income and core commodities. So we won't go through every single day, but I think this list gives you a good idea of the wide range of options we offer. So let me dive into the Japan market outlook. And first, let's look at the performance of Japan equities. So as you know, the Nikkei has been trending upward, and despite some pullbacks, it continued to reach new heights. Let's compare with other major markets with Japan market. And if you look at how the market has done over the last 3 years and also the last 6 months, you can see that Japan equity have been very stable and suddenly resilient. And whether you look at in yen or dollar, both in both currency, the Japan has held up well against other major markets. And this has a lot to do with the company's steady earning growth and better corporate governance and growing confidence from both international and also the domestic investors. And I included this slide as a reference, where it's showing the year-to-date market cap, so the price performance of the top 10 largest companies in Japan. So, like the US and Korea, Japan has also seen AI-related semiconductor stocks rise well, and companies like Kioxia have seen their market cap expanded significantly, and Kioxia has been becoming the #1 largest company in Japan. So I'll come back to some related things later. And for now, let's move on to earnings, which have been another key support for the market. And as you can see on this box, the latest earnings were very solid in Japan. For the fiscal year ended March 2026, its result beat analyst expectation, and many companies reported profit above forecast. And the chart on the right shows something notable. The consensus topics FY 2026 EPS has been revised upwards since February. And before the Middle East situation worsened, so the earning outlooks remain resilient across many industries, and especially those benefiting from the AI-related demand. And also, this should help limit downside risk for the Japanese equity market entirely. And as a lower chart shows, the earnings are still expected to grow in this year and also the next year. So, and this has been supporting equity performance. And next, let's look at the domestic economy. So, as I said, Japan is moving out of the roughly 30 years of deflation and returning to a more normal growth cycle. And shift is supported by steady wage growth, one, and also the improving corporate profiting. And tension between the US and Iran have actually worsened yesterday, so which has added some near-term risk to energy prices, and the situation remains fluid. So as long as this doesn't escalate into a much more serious or prolonged conflict, we expect a direct impact on Japan's economy will be stay relatively limited. But some uncertainty still lingers beyond the direct geopolitical risk, and also the particularly around broader commodity prices and the global demand. So as long as tensions doesn't escalate further and the global economy avoids a sharp slowdown, we expect that Japan's recovery to continue at a gradual and domestically driven pace, which is supported by wage growth and resilient company earnings, and also the ongoing capex by private companies. Earlier, like digitalization. And I also like to touch on the impact of the Middle East shock as well. So Japanese government is working to limit the negative effect on the economy and also the daily life. For example, Japanese government is using the fuel reserves and also the subsidies to keep gasoline price down. Like from March, it was really high of the gasoline prices, but now it's steady by using the subsidies. And so this hasn't worked well so far. And other chart in the lower shows the domestic production has not fallen sharply, if you can see in here. So higher oil prices are pressuring some sectors like energy and chemicals. However, the strong demand for AI and semiconductor is helping offset that pressure. So backed by the data center investment or production of semiconductor equipment and electronic components remain solid. So overall, industrial production is staying stable here in Japan. And next, on supply and demand situation now in Japan. So this picture is becoming more supportive now. So this is mainly because the Japanese company is stepping into the share buybacks and becoming major buyers of their own shares. As you can see from here, the business corp is a really big buyer of their own stocks now. And also the foreign investors have also turned to the net buyers recently in this orange line. And also the foreign investors totaled 10 trillion yen buyer from January to June this year. And it is making a record high of their buying. And the households are shifting long-term saving into the stocks using the NISA. It's a program of the tax-exempt investment program. So overall, these factors are supportive to the market. And next, let's talk about the yen. So if you look at this chart, you can see a major regime shift since 2022. So the yen broke out its the previous 105 to 115 range and then into the really peaked above 160. So looking at the 30-year view below it, it's clear that we're in the extremely weak level of the yen. And on the right, we are comparing the US dollar against other major currencies. And you can see the yen is especially depreciated against the dollars. And while some, like the Swiss franc, have actually gained value, and the yen has moved in the really opposite directions. So this is a reality of the currency environment we are in now. And this slide is about BOJ's actions. So since 2022, the BOJ has made several policy adjustments and raised the short-term policy rate multiple times. And most recently, in last month, BOJ has risen the rate to the 1%. And this suggests that as long as the economy stays on track, the BOJ remains committed to policy normalization. They didn't change any policy on the rising the rates. Although the BOJ has been cautious this year, the long-term direction toward a more normal rate environment has not changed at all. So next, let's look at the FX intervention. And the most recent intervention was happened in the late April and to the early May, with total yen buying of around 12 trillion yen. It's about 74 billion US dollars. And looking at the intervention since 1998, a simple estimate suggests there are more, still be around 30 trillion yen in surplus dollar from past actions. So there is still room for further yen buying intervention, we think. So recently, the yen has weakened even further, with dollar yen trading around 162. At these levels, the market is increasing alert to the risk of additional intervention and is watching how authority will respond. But in principle, Japan's rate hikes should help narrow the interest rate gap between the US and Japan. So we expect this to gradually support a stronger yen in going further. But as the chart on the lower left shows that gap between the US and Japan is already narrowed compared with the past, like 2 years ago. So with also the consensus, the market consensus is expected to the gradual yen's appreciation for going further. So we think the yen will be appreciated in the future. And looking at the market expectation for the rate hikes and cuts, this showing the total of 2 rate hikes in Japan this year. So this means there will be one more rate hike in Japan as market expected. So that's some quick introduction of market outlook for Japan. And now let's move into the 4 key themes we will focus on today. So they are the semiconductor, critical minerals, banking, and shareholder regions. The first one is semiconductor. But before into the semiconductor, I wanted to show some performance of the sector indices. So as I mentioned earlier, the semiconductor related stocks are attracting a lot of attention in Japan. So however, if you look at the sector breakdown of the topics, the semiconductor trend is not clearly visible in their performance. So looking at the sector index performance, like steel and non-ferrous, or the metals and energy, or banks, have stopped out. But also the construction has outperformed the topics. So they didn't show in the trend of the semicon and AI at all. But when we look at our growth theme index, it's completely different picture. So this seems like semiconductors and technology related one are better performed against the topics, really well performed. So then those kind of growth theme index could capture what is happening in the market today. So we wanted to show some sectors and the themes that reflect current trend in Japan from now. So the first one is semiconductors. So in fact, Japanese companies account for only about 9% of the chip making in the global market. But Japan is dominating many of the equipment or material and the components essential for the semiconductor production. So in many of these critical areas, Japanese companies hold a top global market share. So as global demand for AI grows, Japanese technology is needed to build that infrastructures. And with the rapid growth of AI and the global demand for semiconductors continue to expand, as you know. And also, this means that the demand for the semiconductor is driving strong demand for semiconductor manufacturing equipment as new factories are being built around the world. So this is supporting the multi-year upcycle in equipment, and the Japanese manufacturers are structurally well positioned to benefit. So in the previous slide, I showed some Japan companies dominating in the material and equipment area in semiconductor industry. So Japan plays an important behind the scene role in the global chip ecosystem through its leadership in equipment, materials, and components. So for investors who already have exposure to the US semiconductor names, Japan semiconductor related stock can broaden value chain exposure and provide a complementary way to access the same scene, semiconductor scene. And here we're showing the performance of the semiconductor index. These two, the Japan Semiconductor Top 10 and Japan Semiconductor, these two index we're using for our ETFs. And for the 5 years and the 1 year performance. So over the both period, the two index return have stayed broadly in line with the global semiconductor index. I mean the SOX index. It's a dark blue line in here. So this tells us that Japanese semiconductor indices have kept pace with the global chip cycle without lagging behind the international peers. So these are a really good theme for us today. And the second theme is the critical minerals. So what is a critical mineral first? So the critical minerals are essential for advanced industries like EV batteries, semiconductors, and also the renewable energy. But they also so demand for is expected to keep growing for especially for minerals like lithium and cobalt and nickel. And Japan isn't rich in natural resources, but that show in these areas. And Japanese companies have built really strong global sourcing networks and supply chains, especially through the major trading companies. We call the trading company like Sogo Shosha. And Japan is also strong in the recycling, used electronics and the industrial equipment are often called an urban mine. And Japan has well-developed system for collecting and sorting high-quality recycled material. And in addition, Japan is also strong in substitute technologies. So companies have worked to reduce dependence on rare earths through material innovation, precision engineering, and also the advanced processing. And this critical mineral themes is getting more attention as supply chain risks around critical minerals becoming more visible. So Japanese government making this critical mineral as a strategic priority, with policy focusing on the diversifying suppliers and expanding recycling, and also the building strategic stockpiles. So our metal business index has aimed to cover companies across these areas overall. And also the demand for critical minerals should keep on growing, driven by the EVs, semiconductors, and clean energy technologies. So these materials are needed not just in Japan, also in the world. So the Japan has clear strengths, not only in the mining related supply chain, but also in the recycling or processing. So for that reason, we see this as a long-term scene, not just a short-term story. So it's supported by structural demand growth and also by the Japan's competitive strengths across the value chain. And this slide compares the Japan metal business index and the topics. So as you can see, the index has outperformed over the both 5 years and also the 1 year. And this shows that critical mineral theme has been gaining traction in the market. And we believe this is supported by a long-term demand growth and along with the Japanese strengths in sourcing, recycling, and also the processing. So next theme is banking. And so this has been the most watched sector in Japan from last year. So after the decades of near zero rates, we are finally seeing the structural turning point. So as long-term interest rates moving higher, banks are benefiting from the wider net interest margin. And this has driven strong outperformance versus topics, as you can see right here. So, and it has also improved earnings visibility. So Japan's bank index, it's the orange line in this chart, has also outperformed the US financial benchmarks like SP 500 Financial, SP Bank Select, and also it's outperformed Nasdaq 100 in the last 3 years. So it was really quite well performed. And also, we think within Japan, this performance, I mean the Japanese bank performance, has been led mainly by the mega banks of these, Mitsubishi and Sumitomo and Mizuho. So one reason is that mega banks are benefiting from higher domestic rates, which is widening net interest margins. And they've also continued to grow overseas earnings, with profit reaching the record highs again this year. So given their scale and global reach, mega banks are in a stronger position than regional banks. So that's why we believe they will be remaining a key driver of banking scene in Japan. And this is why our ETF has a higher allocation to those mega banks. And this slides show the performance of the over the 5 years and also the 1 year of the bank high dividend index and the topics. So over the past 5 years and 1 year, the bank index has outperformed the topics well. And also it also shows that bank performance has moved higher alongside Japan's 10-year bond yield. So that suggests that from the Japan's shift toward a more normal interest rate environment. And last thing is the shareholder return. So for many years, Japanese companies were criticized for holding too much cash. But that's now changing and helped by governance reforms and initiatives from the government and exchange in the Tokyo Stock Exchange. And more companies are focusing on capital efficiency and ROE, return on capital equity. So as a result, dividends buybacks are increasing, as you can see on the and for the buybacks, with this year's buybacks running ahead of the last year's pace. And this trend is also supported by Japanese corporate governance code, which is expected to place even more emphasis on capital allocation and close investment in this summer's revise. And that should encourage more clean and also the sustainable shareholder return over time. And also, there is still a lot of room to grow, we think, because right now, payout ratio in Japan's like 50% range, but clearly lower than the US 80%, also the Europe's 70% level. So the gap remains significant. As the profitability improves and reforms continue, we expect shareholder returns to keep rising. And that could become a powerful long-term tailwind for the broader equity market. And in the sense, Japan becoming a much more investor-friendly market, and we believe this shift is structural, not temporary. So this slide compares our shareholder return index with topics and also the Nikkei 225 over both 5 years and also the 1 year. So on the left, which showing the 5 years, you can see the index has clearly outperformed the topics in the Nikkei. And the gap widened sharply in the 2024. But on the right, over the past year, it has also stayed ahead of topics, though the Nikkei 225 has shown the stronger momentum recently. This is mainly driven by the semiconductor scene outperforming. So overall, this shareholder return scene will be shows the this performance shows that company with strong shareholder return policies, the active share buybacks and dividend policies will be continue to deliver solid performance. So this supports our view that the shareholder returns are very long-term structural thing. So to wrap up, Japan is entering the new phase. The policy is stable and investment is picking up and the corporate behavior is changing in a meaningful way. With wage is rising and the capex getting stronger and the growth of foundation looking like a durable than it has for many years. So that gives us a constructive view on the Japan going forward. So today we looked at 4 key themes: semiconductor, critical materials, critical minerals, banking, and shareholder returns. So in our view, these are the long-term structural themes, not just short-term market trends. So thank you very much for your time today, and I hope this session has helped to give you a clear picture of both the market environment and also the opportunities emerging with it. So I would like to hand the session over to the Sean right now. Thank you.
Okay, thank you, Miss Maki from Global X Japan for sharing with us the Nikkei and the Japan outlook. So we have heard from her the 4 themes that she mentioned. We have also heard from her the macro and the micro factors which are driving the market. I recall when we first did this webinar with Global X Japan in March, the Nikkei was hovering around 53 to 55,000, and the question back then was, will the Nikkei break the 60,000 mark? And look at where we are today. The Nikkei has broken the 60,000 mark, and the question is whether it will continue to go on further beyond the next target price. Yeah. So for me right now, I will now quickly introduce everyone to ETFs and also introduce you to some of the Global X Japan products which you can look at to relate to some of the contents that were being shared by Ms. Maki Kudo just now in her presentation. Now, for starters, a very quick introduction. What are ETFs? ETFs are actually exchange-traded funds which are listed and traded on a stock exchange, right? And these are some of the benefits of ETFs. For example, you have diversification because ETFs, they tend to hold a basket of stocks within a single trade, and they have low fees, right, than compared to many actively managed funds. Flexibility, because you can buy and sell, you can trade them on an exchange just like any other stocks. And there's transparency, because you can always find the information about the ETF on the issuer's website, or you can go to the general websites such as Yahoo Finance to find out more. And of course, accessibility, you can access different markets and asset classes with ease. So in a nutshell, this is what are ETFs for those of us who are new to this. And then when it comes to investment themes for ETF, usually you see these 4 different themes: growth, income, core, and commodities. So growth includes things like thematic ones, which are like semicons, AI, defense tech, or banking tech, banking sector, and etc. So this could really be very focused on those capturing those growth opportunities via an ETF. And of course, there's income themes, which are focused on really steady income and enhancing your portfolio diversification through high dividend stocks, through some cover call strategies, for example. And of course, there are core themes such as global market leaders, the tech leaders, and also some of the more prominent names within each country globally. And commodities theme, such as the critical materials, uranium, metals and mining. Gold has been hot last year, so there's also gold themes ETF. Yeah. Now, before I go on to introduce to you about ETF, here are some of the common things that we talk about when we speak about ETF, right? There are things like AUM, which is essentially the total amount of money invested in the ETF. And from a very layman perspective, right? Usually the high AUM ETFs, they are more stable, they are easier to trade, and more liquid and less likely to be closed. Yeah. And then expense ratio, this is one of the things that I mentioned previously, right? Low costs over here. So expense ratio will tell you how much the fund manager is actually charging you annually for investing in an ETF. And this is actually part of the net asset value in the ETF. So if you see a 0.1% expense ratio over there, or 0.1% management fee, it's just telling you that it's $1 being charged per year for every $1,000 invested. So this is why we mentioned that ETFs, they're usually low cost, right? And then you see NAV, net asset value, which is actually referring to the fair value of one unit. And with NAV, it's important to note that this is not the traded price, right? It's just the fair value of one unit. The traded price is actually determined, you can actually relate it to a discount or premium to the NAV, right? Seeing whether the ETF is trading below or above the value of the asset that it owns. So small differences in this premium or discount is very normal. So large premiums means that you're paying more than what the portfolio is worth. And then you hear things like management style, how the fund is being managed. So you see differences between passive ETF, which usually follows an index and have lower fees, or you see active funds which try to outperform the market, but they often come with higher charges. Weighting scheme would be like how the ETF is being built up, how are they being weighted in the ETF. You hear things like equal weighted or market cap weighted. So market cap weighted just means that the larger companies make up a bigger portion of the ETF because of their market cap. And then replication method, how the ETF tracks the index. Physical means that it actually owns underlying stocks, and this is usually the preferred by many investors due to the transparency and how easy it is to understand this replication method. And some ETFs, they pay out dividends, right? And how they treat the dividend depends on whether they indicate it as a distribution or an accumulating. So distribution means that they pay out to you. Accumulating means that these dividends are being reinvested automatically, right? And lastly, the dividend yield, you see that this is the income that the ETF pays relative to its price. So $5 yield means roughly $50 in annual dividends for every $1,000 invested, of course, before the taxes and the price changes. Yeah, so this is a general guideline on how to read up on information on ETF. So without further ado, I'm going to introduce to you 10 Global X ETFs, which you can get exposure to some of the things that Ms. Makikudo mentioned in her previous sharing. Now, she mentioned about semiconductor as one of the theme, and I'm going to highlight to you 3 ETFs. The Global X Japan Semicon ETF, the Global X Japan Semicon Top 10 ETF, and also the Semicon ETF. All right. So 2644, 2828, and 2243. These are the ticker codes that you can search for them inside your Nova app, or if you search online, you just have to search these ETFs which are listed on the Tokyo Stock Exchange. Right. So let's talk about the 2644 first, which is the Global X Japan Semicon ETF. Now, the last time we actually did this webinar covering similar themes was in 19 March. All right. And this was the price of the 2644 back then. So if you look at this blue color crosshair over here, it was around 3,100 back then. Today, we are here. All right. This was the price that I took, I think, yesterday, and it was at 4,886. So this is how much the ETF has moved in the past few months. This shows the strength of Japan's semicon industry and how the value keep gaining because of the momentum, because of the value that they bring to the whole industry chain. All right. And if you look at the returns for this ETF, year-to-date return is around 94%, 1 year return is 158%, and 3 years return is at 517%. All right. So this is one of the ETF that we would like to highlight if you would like to gain exposure to the semicon theme that was being shared about previously. Now, some of the key information about this ETF. AUM is over here. Actually, all this information, you can actually see them on the TradingView website, which I shared with you earlier, that you can connect to the Nova platform also, right? So AUM over here is a very, very high AUM, meaning that this ETF is actually very widely traded and is a very popular ETF. Dividend yield is at 0.44%, expense ratio is at 0.6%, all right? And this ETF, it actually seeks to provide investment results that correspond to the FactSet Japan Semicon Index, all right? So as per the name, the niche is semicon, and the weighting scheme is actually via market cap, and the selections are all Japan focused, all right? So let's take a look at the holdings. Fund composition is not all what you see here are the top weighted composites of the fund. So you see very prominent Japan names such as maybe some of you are familiar with Tokyo Electron, Lasertech Avantes, Renesas Electronics Corporation. So all these are really big companies in Japan, and they make up these respective weights in the ETF. And because of how well these companies are performing, that's why it's also driving the performance of this ETF, right? And you can see over here, the market value change in the past 1 month alone for each of these companies. Very, very strong companies. That's why you have a correspondingly strong ETF performance as well. Now, the next product that I want to introduce to you is the 282A, which is the Global X Japan Semicon Top 10 ETF. All right. So also another Japan Semicon ETF focusing on the top 10. All right. So back then when we spoke about it, it was at 1,792. This was on 19th of March. And fast forward to today, 9th of July. I think this was captured over the past 2 days. You can see that the price has appreciated very strongly to the price of 2,980. Yeah, so I think it might have broken the $3,000 mark today again. So this is the corresponding performance. Year to date, 104%, 1 year performance, 180%, 3 years at 193%. So again, another very well performing ETF. The AUM is over here. It's in blue because you won't be able to see this information from the TradingView website. But if you want to find out more about this, you can always go to the homepage of Global X Japan, and you can search for this ticker 282A, where they will list down all the information about this ETF. And of course, there are corresponding information over here as well. So to note, the expense ratio of this ETF is at 0.11%, which is lower than the previous ETF that I introduced, right? There's a dividend yield of 0.33%, and then selection is by market cap, geographies in Japan. Yeah, so another ETF that you can look to consider. And these are the top 10 ETFs that is being listed over here. One of the most outperforming name would be really the Kioxia Holdings Corporation. 1 month change is at 56%. All right, so this is one of the difference between this ETF and the other ETF. Now there's also the 2243, which is the Global X Semicon ETF. Right, back then when we introduced it, it was at around 2009, and today this ETF is hovering around the 5,000 mark. Right, so very strong performance once again. Year to date 80%, 1 year 150%, 3 years around 150%. So you can see the explosion in terms of the growth happened pretty recently, right? You see this very clear uptrend over here. Of course, if you zoom out into the wider picture, you'll be able to see the 1 year and the 3 years performance accordingly, right? So some key information about this ETF. Also a very strong ETF with high AUM, 0.12% dividend yield, expense ratio of 0.41%. All right, and what this ETF is, what is different from the previous two, because it looks to invest in US listed companies, right, whose principal business is in the semicon related industries, right? So the previous two, they were in Japan companies related to semicon. This one is in US, right? So the exposure is different, but the niche is still the semicon industry, right? And the weighting scheme and the selection criteria is still the same by market cap. So let's take a look at these companies which are inside this ETF. So you can hear, you see Micron, you see AMD, right? Some of the US names. You see SK Hynix, which is due to be listed as an ADR this Friday. You see TSM and some of the familiar big names over here, right? So again, the performance of these components, they're also pretty strong, and that's why the performance of this ETF is also good as well. Now move on to the next theme, critical minerals, right? So over here, there are 3 ETFs to highlight: the Global X Japan Metal Business, Global X Uranium, and the Global X Copper Miners, right? And these are the ticker codes. For the Global X Japan Metal ETF, this is the chart that you can see, all right? So as of the latest price is hovering around 3,007. There have been some movements in the metals if you have been looking at the metals. So that's why there's some support and resistance being spotted over here, right? So the performance for year to date, 36%, 1 year is 131, and 3 years is 141%. And then for the AUM, this is the figure, and expense ratio is at 0.6%, dividend yield is at 1.36%, right? So this one is really tracking the Japan Metal Business Index, and the geography is mainly Japan, all right? So it's really Japan metal business within Japan itself, right? And the dividend distribution, right? So these are the information that you can see. And then the components over here, you see names like Sumitomo, Mitsui, Kinzoku, and Kobe Steel, Mitsubishi, right? So these are the components which make up the ETF, and you can see their relative performance over the past 1 month. So this data, it was extracted as of July 6th. So you can see like pretty strong performance, okay? And then uranium, the uranium ETF. So this uranium ETF, these are the performance for the uranium ETF. For those who see uranium as a critical material that has got high potential, this is one way you can get exposure to uranium, all right? And then for the AUM and the dividend yield is all as such. The expense ratio is very low for this one at 0.03%, all right? And the coverage is actually global, all right? So what this ETF does is, it tries to track the solar active global uranium and nuclear components total return index, right? So that's why it's a global geography, and the niche is in nuclear energy. which uses a lot of uranium as a core material. And this is the fund composition. So pretty much it is as it is, right? With some exposure to the US dollar. Next, copper miners, right? So for those of you who know, copper is a very important material when it comes to power, right? And this is one way you can get exposure to copper via the ETF. So over here, you can see AUM is over here, and then expense ratio is at 0.68%. Dividend not indicated over here. I believe you can find more information on the website. And what it does is that it tracks, it seeks to align the rate of change in the NAV with respect to the global copper miners total return index, right? So global means geography exposure is going to be global, right? And then the niche, as its name suggested, it would be copper miners. All right, and then move on to the banking ETF. So banking is another core theme that Ms. Maki Kudo highlighted in her presentation. And over here, I would like to highlight the Global X Japan Bank High Dividend ETF 315A, right? So let's take a look at this ETF. Year-to-date return 35%, 1 year return is 83%, 3 years is at 86%. So of course, because this ETF is really focused on high dividend, right? Yeah, but at the same time, you can see that the capital appreciation in this ETF is also pretty strong at 35%, even with a high dividend payout, right? So over here, dividend yield is at 2.18%, expense ratio is at 0.28%, and then the geography exposure that you have is Japan, because it's really covering the Japan banks, right? And then dividend treatment is via distribution, and weighting scheme is via market cap. All right, and then apart from, there's also the shareholder return, which is the 225, Nikkei 225 shareholder return 40 ETF, code 465A, right? So this is the return, 16.29 year to date, 23% for the 1 year return. And because this is a fairly new ETF, right? So you can see that it only, the inception was only in December last year, right? So this is the performance of this ETF so far. So AUM is over here. You can find out the actual figures on the Global X Japan website itself. Expense ratio is at 0.3%. So what it does is it tries to match the volatility of the NAV with the volatility of the Nikkei average shareholder return stock 40 index. And the exposure over here is in Japan. All right, it's a broad-based index with and the weighting scheme is a market cap. Now, there are also two other notable and very popular Global X Japan ETFs that I would like to highlight. The first one is the mid and small cap leaders, and the other one is the leaders ESG ETF. So for the small and mid cap leaders ETF, over here you can see back then the price was hovering around 3,000, and right now the price is hovering around 5,600. All right, with it breaking the 6,000 mark, I think a few weeks ago. All right, so year-to-date performance 103%, 1 year performance 123%, 3 years performance 178% for total returns. So AUM pretty huge, and dividend yield is at 0.68%, expense ratio 0.28%. Exposure is to Japan companies, because it's a mid and small cap leaders in Japan. All right, so it's a broad-based ETF, and the dividend treatment is via distribution. All right, so if you think that the Japan mid and small cap leaders are still undervalued, right? This is one of the ETF that you can use to get exposure to their price movement in the long run or in the short run, right? And the fund composition over here, as you can see, you see Kioxia, which has been, again, one of the more prominent stars that rose this year. You see some other small and mid cap leaders over here. All right, and then the market change, you can see over here, very healthy for all of them in the last 1 month. And lastly, I want to introduce to you the 2641, which is the Global X Japan Leaders ESG ETF. All right, so expense ratio is at 0.28%, dividend yield is at 1.6%. So what this does is it seeks to provide results that correspond generally to the price and yield performance of the FactSet Japan Global Leaders ESG Index. All right, so for this one, geography exposure is to Japan, and it's a broad-based index. All right, and the weighting scheme is market cap, selection criteria is principles based. For more information, you can go to the homepage at Global X Japan to find out more. And these are the names that you can see over here. So some of the more familiar names, right? Some of the prominent names that you see: Hitachi, Sony, Toyota, Fast Retailing, which we know as Uniqlo, Mitsubishi, right? So you can see these are really the prominent leaders in Japan which are listed in this ETF. All right, so those were the 10 ETFs that I would like to introduce to everyone. If you would like to get exposure to what Ms. Maki Kudo has shared in her presentation, and you want to build a Japan portfolio, or you want to get some Japan exposure in your own investment portfolio, these are some of the ways that you can get exposure by investing in these ETFs, right? So these ETFs, they come, they are like what I shared earlier. They give you the advantage of diversification, right? They are generally low cost, and with Phillip Nova, right, I think the best thing is really there's a free market data, right? So you can look at their prices during the trading session, and you can trade as and when you want to get the exposure to Japan. Now, for those of you who have been wanting to invest in Japan, right, and you are concerned about the Japanese yen, right? So the Japanese yen was one of the topics that was covered earlier, right? The strength of the yen, will it weaken or will it be able to strengthen in the next few years? We are not sure, right? But the trend has seemed to suggest that it is on a weaker trend, right? But with a weaker trend, it doesn't mean that the opportunities in Japan should be ignored, because the equities market are doing really well, right? But the yen weakness would sometimes bring some concerns to us as an investor, right? Would our capital gains in the ETS be offset by a weaker yen, right? And this is where I would like to introduce to you our Phillip Nova platform. Like I mentioned just now, this is a platform that can give you multi-asset trading. It means that you can actually hedge your yen exposure with us, right? So when we talk about currency translation risk, if you are concerned about a weaker yen, you would want to take a hedging position to take care of that risk. And how can we do that for you, right? So if you are buying into a Global X Japan ETF, you have a Japan exposure over there. And these ETFs, they are usually denominated in Japanese yen, right? That means you have a long yen exposure. In order to hedge and capture the equity upside, right, you do a hedge on the currency, right? If you're converting your SGD to yen, you long the SGD yen. If you're converting your USD to yen, then you are long the USD yen. The idea here is you want to be able to short the Japanese yen so that if it really weakens, you are covered against that weakness. All right. So, and the best part about this is that because this hedge, right, is available in forex contracts, it means that you can actually adjust the size of the exposure from the micro lots all the way to a standard lot. So a standard lot is around 100,000, right? And then a micro lot can go to as low as I think $1,000, right? So this is one of the ways that you can hedge your currency exposure. Now I'll show you how this works, right? So let's use illustrative rate for the purpose of simplicity, right? So example, if you have a 50,000 yen exposure, right, and you want to hedge against it, the FX hedge notional that you need is actually around 500 Sing, And the way you can do it is, you can hedge via forex, spot forex contract, or you can hedge via futures yen contract, right? So these are also available on our Nova trading app. A full hedge means that you sell the full 50,000 yen, right? So you buy Sing and you sell yen. So you're completely protected if the yen weakens. You protect the value of your capital gain without sacrificing the yen strength, all right? But for some of you, maybe you prefer a partial hedge, which could be between 50 to 75%, or whichever amount per your own risk appetite. So in this case, you just need to hedge whichever amount that you want to hedge. And then that leaves you to be at least partially protected against a potential weakness. So if let's say the yen weakens, right, the Sing yen will rise, right? And the FX rate would actually gain. So it offsets away your ETF FX drag, right? Because if you didn't hedge, your capital gain would be there, but it will be partially offset away by the yen weakness. When you hedge it, you can actually protect against the yen weakness, and it offsets away the drag on your capital gains, right? But on the other hand, if the Japanese yen strengthens, you have to know that your FX leg would actually lose money, but your capital gain would still be there, and you will gain more in terms of your SGD terms, as long as your equity performance outweighs your forex performance. So the idea here is, if you want to hedge, you should hedge it based on your conviction. And if you feel that the yen will weaken, this is one of the way that you can take on a larger hedge. Likewise, if you, let's say, you feel like you're only comfortable with a partial hedge, then you can also do the same, all within one platform using one wallet and one single ledger balance. So this is one of the ways that Nova helps you as an investor to manage your global portfolio. Now here's a scenario analysis to put into numbers what I just mentioned. So for a starting rate of Sing yen at $100, at 1:100, right? And ETF position of a yen 50K, right? So in the case where the yen weakens, right? So it started at 100, right? 1:100. If it weaken to 110 or 120, your ETF value, all right, it would actually decrease if you do not hedge your yen exposure. But if you manage to hedge your yen exposure, even though your ETF value decrease, the FX hedge would actually bring in gains on the FX side to offset away your ETF depreciation due to the yen weakness, right? And what this means is that with this hedge, your Sing value of your yen portfolio is actually kept intact. All right. Of course, with FX, there's gonna be swaps and overnight charges, but all those they are another part of the conversation. But in this scenario, we're trying to show you that, with a hedge, this is the advantage that you can bring to your Japan portfolio, and you can do it with one single ledger. Now, in the other scenario, if the yen strengthens, this is where your hedge would actually lose money, because you're actually long Sing yen, right? So you're actually short the yen, and if the yen actually appreciates, your hedge will lose money. But if your ETF, but because the ETF, right, it will gain in value because of the Japan currency change. So ETF value, right, that appreciation due to currency would actually be offsetting away the loss in your FX hedge, right? So this is the whole point of a hedge. It keeps your foreign currency value exposure relative constant to your Sing initial capital outlay, right? So you capture the equity movement without being compromised on the foreign currency movements and exposure. So that's the whole point of a hedge and how it helps you. Now, I've shared with you the 10 ETFs that you can get exposure to in Japan. the thematic ones covering semicon, the banks, the Japan leaders, and also the high dividend ones. So that's one part. And also I've shared with you how you can use our Nova platform to do a multi-asset strategy where you invest in an equity ETF because you want to invest in a certain overseas market, and at the same time you can use the other multi-asset trading to do some hedging on a certain currency exposure. Earlier on, I also shared with you some of the commissions that we have for Japan. I shared with you also the live data which we give for free for Japan. Yep. So now I'll share with you the exclusive account opening promotion that we have. So on the left hand side over here, we have the account opening QR code. So we have this promotion where you just need to make an initial deposit of at least SGD $1,000 or equivalent into your Nova account by 14th of July, right? 14th of July, 5 days later. And then you just have to execute at least one trade in either stocks or ETFs on Nova by 14th of July. So once you fulfill these two criteria, you receive $50 in trading credits, which will insert into your account by 15th of August 2026. So in order to really make use of this promotion, you just have to scan this QR code and complete the account opening and fulfill these two steps by 14th of July. All right. And if you have any questions, you can drop us an email. I will give you some links overall at the back later on, so you can contact us. All right. So I'll leave this slide here for a few more seconds for those of you who have not captured the QR code. All right, so that's the end of all the content and presentation that we have today. Now, I will allocate the time for Q&A that will answer some of the questions from the audience. So let me take a look at the questions over here. Okay, I see a question by Mr. Steve Fu. Maybe Miss Maki, you might want to answer this question. So the question is, the Japan market has been trending up and beating the historical highs. How high is the possibility of a correction within the next 6 to 12 months? Miss Maki, over to you.
So I think there will be the collection sometimes because the market participants sees too much semiconductors stocks are rising. So of course the Japanese equity market would have affected by the global market. So that will be the biggest factor of the collection for Japanese market, I think. But the major securities company in Japan shows some expectation for the 80,000 yen for the end of this year. So maybe it will be happen, I think. Thank you.
Thank you, Miss Maki. All right, next question by Mr. Steve Fu as well. It says, with yen appreciation, there is a possibility of unwinding of the carry trade. This will affect the Japanese market significantly and global markets as well. Kindly share your opinions on this. So back to you again, Ms. Maki, on this question.
So I think the carry trade is some effect of those. But we see as in my presentation, I show some the FX intervention history by the BOJ, and I think they have still much power for the intervention in the future, and also I think the market sees the 165 will be the low at this moment, so that will be the chance of the market participants change to the trade. of the yen and dollar, I think. And the bottom will be the 150 something, I think. Yeah. And also as you mentioned, the yen will be really affect for the Japanese equity market as well. But in this semiconductor trend is still active. I think there's not a much big impact on the yen and dollar trend. Thank you.
Okay, thank you, Ms. Maki. I have two questions from Mr. Philip. The first question is, will the Japan or the Nikkei turn down when interest rate starts rising or when Wall Street drops sharply? And then the other question is, how would the Nikkei react with adverse news as the South China Sea tensions rise? So, Ms. Maki, I believe these two questions, I'll hand it over to you as well.
Oh, sorry, what was the first question?
Yep. The first question is, will Japan or the Nikkei, will the Japan market turn down or depreciate when interest rate starts to rise, or when the Wall Street or when the US market drops sharply?
Okay, so for the Japanese yen and US dollar, will be have the some connection between as I mentioned in the presentation, the yield gap between US and Japan is really have a that would affect on the Japanese yen deeply in principle, but now in Japan, Japanese government, the BOJ is really going into the late hike, but the effort Federal Reserve is going to decrease the interest rate. So the yield gap between the US and Japan will be narrowing going further. But because of the Trump, they affecting the policy pattern negatively. So the direction of the FRB is really unclear. So hopefully the policy of the FRB will be going to positively, but we have not much about FRB direction. But in Japan, BOJ would going through the interest rate hike is going forward, I think. Yeah, that will be my comment on the interest rate on the Japanese yen. Yeah.
Okay. And then the other question would be by Mr. Philip as well. It would be, how would the Nikkei react with adverse, would there be any adverse reactions from the Nikkei as the South China Sea tensions rise?
So after the relationship between the China and Japan is getting worse from the last year, it has a little bit impact on our market because on the Japanese economy, we had a much dependence on China before, but we are trying to diversify some suppliers, and also we wanted to make smaller of the dependence on China and the China economy. So it will be not much big impact than before, like 10 years ago or 20 years ago, I think. There will be not much big expected to before. Thank you.
Okay, thanks, Ms. Maki. I see another question by Ms. Jennifer Lim. So, these are listed on these ETFs are listed on the Tokyo Stock Exchange. Are there any on the SGX so that you don't have to do FX? So yes, these ETFs offered by Globex Japan, they are listed on the Tokyo Stock Exchange. If you want to have Japan exposure for products listed on the SGX, we can get in touch with you to share more. But for today's presentation, it will be on the Globex Japan products which are listed on the Tokyo Stock Exchange. Yeah, but we'll get in touch with you regarding your question. Yep. Question by Mr. David Chen. What is the probability of BOJ raising interest rate to address the weakening yen? Ms. Maki, over to you for this one.
So the BOJ is now in the stance of raising the interest rate for the going further, and the stance is not changed now. And also for the weakening yen, they have still much power for doing the intervention in the FX market. So I think the two ways for the address of the BOJ will happen. For the one is raising the interest rate, and the second one is the FX intervention. I think.
Okay, thank you. And then I see a question by Mr. or Miss EG asking about any capital gains tax for Singapore investors. So generally, we do not pay capital gains tax for the Japan ETFs, but they may be taxed separately depending on the asset class. Let us get in touch with you regarding this question to share more because it really depends on the product that you're investing in or trading in. Yeah, so we'll get in touch with you based on the email that you have registered with us. Okay, and then by Mr. or Miss Lim, is it possible to flash the ETF list again? Yes, we can send over to you the ETF list, be it the 10 products that I mentioned or the products which were mentioned by Miss Maki earlier. So we can share that with you. Actually, let me just quickly share with you. These were the ones that Miss Maki shared. We'll send this over to you. So these are the most popular ETFs. And then the ETF with thematic growth themes. And income ETFs. Core ETFs. And lastly, commodities ETFs. So these are the ones. Yep, we'll send this over to you via email as well. Okay, I see one question by Miss June. Can you explain the similarities and differences of Japan and South Korean market? Maybe Miss Maki, would you like to take this question?
I would address on the semiconductor things by the difference. So the both Japan and South Korea is booming the semiconductor stocks now, and the South Korea's company, I mean in the semiconductor sector, would be mainly the chip makers. But for Japan, it will be the more material or equipment focused. So it will be some much difference between in semiconductor industry mainly, and also the morally the Korea stock market is led by the semiconductor mainly now, but Japan is more broadly. I mean, in fact, Kioxia is leading the market now, but more traditional sector like Toyota or any other big company like financial Mitsubishi Bank or those kind of sectors are still mainly leading the Japanese market entirely. So that will be the difference between the Japan and South Korea, I think.
Thank you, Miss Maki. All right, I think that's all the questions that we have. But for those of you who wants to get in touch with us, or you're requesting for some sending of the information, right? I see that there are a few requests. Kindly help us to fill in the post-event survey over here. Right, you can scan this QR code where it will give you 3 links. The first link is to our Telegram channel where you can receive daily market updates for the global markets. The second link is a post-event survey. Do let us know how you find this session today, and also there are some other questions. If you have any questions, you can also put it inside this survey, and we will connect to you via email as well. If you want to request some information, do help us fill out this survey as well and indicate what information that you would like to request from us, and we'll send it over to you as well. We will appreciate it a lot. And of course, the last link that you see is an account opening TNC, which is this account opening promo that I've flashed on the screen here just now. So again, to reiterate, make an initial deposit of at least $1,000 into a Nova account by 14th of July, execute at least 1 trade in stocks or ETF. All right, and you receive $50 in trading credits by 15th of August 2026. Yep, so this is the QR code. To give it a scan and help us with the survey as well. Otherwise, I think that's all for today's session. Thank you everyone for your participation. We hope you enjoyed the whole webinar, and you can look forward to more sessions with Global X Japan and Nova. Thank you, Ms. Maki Kudo, for sharing your expertise on the Japan market, and thank you everyone for your time today. That's all. Bye-bye.